Microsoft comes public 86?
Yes.
How many years after Microsoft came public did it take before investors thought investing in Microsoft was a conventional
It's a good
investment?
question. I would say my memory was that it really started to get going in the mid-90s, maybe in late 90s, and probably
10 years?
At least 10 years.
You know, it's funny what you just said, though, which is you bought it and then you sold it after you made some money. And so many people will do the same thing with Bitcoin. Like the way people think about Microsoft and Apple today, which is you just never sell them, you just own them forever.
Right.
Yeah. And by 2035, they'll probably say, now I think I'll just own it.
Right.
You know, and Kramer.
Right.
If he's still working
From Seinfeld, right?
If he's still working on CNBC, he'll be saying, yeah, Bitcoin, you just own it, you don't trade it.
The recently concluded Bitcoin Atlantis conference was a powerhouse event, boasting fiery keynote speeches from industry titans like MicroStrategy's executive chairman, Michael Saylor, Square's CEO Jack Dorsey, and Strike's CEO Jack Mers. Over the three-day conference, attendees were treated to a myriad of panel discussions, including an ultra-bullish one moderated by Preston Pysh and featuring luminaries like investment strategist Lynn Alden and sound money advocate Lawrence Leopard. During the discussion, Saylor made an ultra-bullish prediction for Bitcoin, envisioning a frenzied gold rush decade between 2024 and 2034, where investors would scramble to acquire available coins before supplies dwindle. He emphasized 2034 as a pivotal year, as 99% of Bitcoin's total supply would have been mined by then, with the remaining 1% slated for completion by 2140. Additionally, Saylor and Leopard explored Bitcoin's future perception among investors, with Saylor likening its potential stature to that of household tech giants like Microsoft and Apple. In a surprising turn, Leopard, formerly a staunch advocate for gold, declared his full conversion to Bitcoin maximalism, citing Bitcoin's superiority as an asset over gold. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
First of all, let me just say, somebody pinched me. I mean, it's like I'm a club payer for Bedford, and they say, let's go scrimmage with Messi and Ronaldo. I'm like, what the fuck am I doing here? I'm just an old fart gold guy. And I view my role in this whole thing as converting gold guys into Bitcoin, because they get half the problem. They understand the monetary debasement issue. They just got the wrong tool, as Michael says. And thank God Bitcoin came along and gave us a much stronger and better weapon, which I've increasingly embraced, and of course now I'm a full-fledged maxi and out of gold, or getting out of gold. But I've seen in my base probably 50-50 conversion. Some people are just too dyed-in-the-wool, can't get over the physicality issue, don't understand the future, don't want to take the time, don't want to do the work. But I've seen others who've completely flipped. A notable one recently was Chris Irons of Quote the Raven, who was a very smart guy and understood the debasement issue, but was anti-Bitcoin because he hadn't done the work. And I just kept working on him and working on him and working on him to do the work, and now he's a raving maximalist. It's really fabulous. So it goes both ways. Some guys get converted and some don't. And but we just got to keep chipping away. I think Michael's point from his brilliant speech earlier of it's incumbent upon all of us to spread the word, because this is the solution to all our problems. You know, in the early 80s, I started my business career. The IBM PC was introduced in 1980, and Microsoft came public in 1986. Came public at 14 times trailing, and it's growing 40% a year. And at the time, if you were in the computer business, you were at IBM or Prime or DEC or Wang. And the mini computer was really the thing, and a lot of people regarded these PCs as toys. And software was regarded as risky because it was ones and zeros, and people didn't see that there could be any value in it. They were saying, how can there be value in the software? It's just written, it's code, it has no value. The value's in the disk drives, the value's at IBM, the value's in these hardware computers, people who are making real stuff. Sounds kind of familiar, right? And I recall, go a little further back, wind it back, I'm at business school, and I'm with my business school roommate. He's with his roommate from Harvard College, a guy named Steve Ballmer. We're walking along the Charles River, and Ballmer says, we've got this thing called DOS, and the entire world is going to need this thing. The entire world. Everybody is going to have it. It's going to be a part of everybody's life. This is going to be a multi-billion-dollar corporation. I looked at him, I thought he was nuts. But then it kind of hit me. He wasn't nuts. It was the base layer of the technology that allowed the PC to grow. And 40 years later, it is ubiquitous, and Ballmer's obviously a billionaire, and Microsoft's a multi-billion-dollar company. I mean, I bought it at the time in '86 when it came public, sold it 3 years later to buy a condo. It was a mistake. The split adjusted price is 6 cents, and the stock trades at, $290 today. So it was, 47,000 times your money, or 4,700 times your money. The point I'm trying to make is that Bitcoin is the same thing, and people don't understand it. They don't understand that it is the base layer of money, and it is going to absorb the entire monetary system given a long enough time frame, at least in my opinion.
Microsoft comes public '86?
Yes.
How many years after Microsoft came public did it take before investors thought investing in Microsoft was a conventional investment?
It's a good question. I would say my memory was that it really started to get going in the mid-'90s, maybe in late '90s, and probably
10 years?
At least 10 years, yeah.
10 years.
At least 10. And it just kind of got progressively better, as you know. We could go look at the Stark chart and see the curve, right?
But for 10 years it was risky. And
oh, absolutely.
you know what's funny, what you just said though, which is you bought it and then you sold it after you made some money, and so many people will do the same thing with Bitcoin.
Exactly.
You'll see in a generation of institutional investors, they'll buy Bitcoin because it's going up, and then they'll sell it after they've made triple profit to take some money off the table. And then 10 years, in 2035, they'll look and they'll understand it much better, and then they'll think, like the way people think about Microsoft and Apple today, which is you just never sell them, you just own them forever.
Right.
Yeah. And by 2035, they'll probably say, now I think I'll just own it.
Right.
And Kramer.
Right.
If he's still working
from Seinfeld, right?
If he's still working on CNBC, he'll be saying, yeah, Bitcoin, you just own it, you don't trade it.
During the conversation, Saylor and Alden delved into Bitcoin's evolution into the foundational layer of money. Saylor, the MicroStrategy executive chairman, elaborated on the concept, highlighting that as fiat currencies continue to weaken, an increasing number of investors, first tens of millions, then eventually billions, will be compelled to invest in Bitcoin. He cited Nigeria as an example, noting its surge in peer-to-peer exchange volume according to Chainalysis data from November 2023. Previously ranked 18th in such transactions, Nigeria quickly rose to the top due to government restrictions on cryptocurrency-related banking services. Alden added that while many governments might attempt similar measures to curb cryptocurrencies, investors would persist in finding avenues to buy and trade them.
I think there's 1,000 different on-ramps. I mean, it's not one. Lightning is an important layer too, but there's a different Bitcoin wallet in every, there's a dozen Bitcoin wallets in every country. There's a dozen Bitcoin exchanges. There's peer-to-peer. It's a different story in every country in Africa, a different story in every country in Asia. It's going to be an evolving story, and you're going to see people develop a lot of competitive layer 2s. You're going to see people develop competitive layer 3 apps, competitive exchanges. Some people will be good, some companies will move fast, some will move slow. There'll be regulatory turmoil. There'll be I could have predicted, like in Argentina, I would have said, at some point, Argentina will close the door to Bitcoin before Javier was elected. Yeah. I would have thought that they're going to institute capital controls. And then that election turned everything 180 degrees, and it went the opposite way. So politics is chaos. And then you saw the opposite thing happening in Nigeria, where it was 400 naira to the dollar, and when it jumps to 1,200 naira to the dollar, they're closing the on-ramps. They're closing the on-ramps to the custodians, but non-custodial solutions become all the more compelling then, right? Yeah. So I don't think there's one answer. There's not even one best outcome or need in one country, because it's dynamically evolving based upon the politics and the circumstances in every single nation on the ground. It even changes by state, by province, right? So I just think this is classic market situation. The one thing that'll happen is all these currencies, as they weaken, there'll be marketing events for Bitcoin. Everyone in a collapsing currency is going to look for a solution. More and more are going to hear about Bitcoin, then they're going to want to be paid in Bitcoin, then they're going to want to download a Lightning wallet, then there'll be another wallet, then there'll be a debate about what to do with it.
one thing I described in my book, actually, there's 160 different currencies in the world. And if you look historically, how does money get in and out, right? Because they all have varying levels of capital controls, more or less, around them. And the two ways the money gets in or out are either through physical ports of entry, which are obviously very restricted. You can only bring so much cash or gold to an airport. And then wire transfers, which again are tightly controlled environments. And so when you have like a space with a failing currency and millions of people, historically the ways to get out were somewhat limited in terms of scale. And what things like Bitcoin and stablecoins do is, one, you can bring them through ports of entry with infinite value density, right? So it gets past that issue. And then two, if I hire a graphic designer in country XYZ, she can hold up a QR code over a video call, or she can send a payment string over email or DM, and I can pay her over that and go around her local banking system. And so there's obviously frictions there for those that are trying to maintain those kind of captive audiences in 100+ different currencies around the world. But what we've generally seen is countries try to kind of block the exits and realize it's not working. Like you mentioned Argentina, there was in 2022, they stopped, a lot of banks were going to get into Bitcoin, and the Argentinian government stopped them from doing it, the big banks. Then they actually, the next year, they extended it to the fintech companies, not even the banks, but the next layer. And they never got to the point where they said Bitcoin's illegal, but they were trying to make it harder and harder to do. Now some of that's being reversed. We also saw in Nigeria, they went through a phase where they blocked all the banks from sending to exchanges. Nigeria then developed the largest peer-to-peer market volumes in the world, according to most measurements, if you look at chain analysis. So basically, whenever there's a friction, if the people want it, the tool's so powerful that they can route around blockages until the problem at the top is forced to change and modify their strategy. And so I think we're going to see more and more waves of that. We're going to see frictions, and then we're going to see overcoming frictions, and then we're going to see new frictions and overcoming frictions, because the market's just, the tool itself is so powerful that it just gives so many ways to route around problems when they emerge.
Bitcoin investors are jubilant as the cryptocurrency briefly surged to new all-time highs, marking a historic milestone just before a significant cyclical event on March 5, 2024. At 10:03 Eastern Time, Bitcoin reached a peak of $69,324, recording an impressive almost 10% increase within 24 hours, according to Bitstamp data. This momentary climb above $69,000 represents a fresh record for Bitcoin, sparking excitement among investors. Senior Bloomberg ETF analyst Eric Balinas highlighted the dual benefits of this price surge for both spot Bitcoin ETFs and the underlying cryptocurrency. In a tweet, Balinas emphasized that this milestone is not only significant for Bitcoin but also for ETFs, underscoring the symbiotic relationship between the two. He pointed out that the rise from $25,000 to $69,000 was largely driven by ETF approval hopes and flows, suggesting a justified correlation between ETF performance and Bitcoin's surge. Balinas' insight into this mutual benefit suggests a cycle of bullishness, where higher Bitcoin prices drive ETF flows and assets under management, leading to increased demand for ETFs, which, in turn, further drives Bitcoin prices upwards. This positive feedback loop is expected to fuel continued bullish sentiment, potentially propelling Bitcoin to new record highs by the end of the year. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.